Hi guys, it's Doc Curry, and the market is starting to show some signs that it might be topping out. This is just going to be a short video to explain to you what's going on with the technicals and to let you know that you might want to think about taking some profits off the table. So let's get into it. Over the past few weeks, over and over again, we have gotten a lot of negative news that the market is just completely ignored. And this has caused a lot of people to get very confused as to what is actually going on. There's some bulls that are saying, yes, of course, stocks should be up because stock market is based upon future earnings and future earnings are expected to go up. And we think that maybe because the Fed is going to stop raising interest rates, that earnings are just going to continue to rise. And this is why the stock market is going up. And then there are other people who are saying that the fundamentals continue to get bad. They're actually getting worse, and the stock market is behaving irrationally right now. They don't understand why the market is going up, and they think the stock market should crash and actually hit new 52-week lows. And the fact of the matter is, they're both correct. The problem is the bulls think that future earnings are expected to be good, and that's why the stock market is going up. But in reality, future earnings are expected to continue to decline. And they're right. It doesn't make sense when a company like Apple has a huge earnings miss and yet continues to rise. Normally, that should have caused Apple stock to sell off massively. And things like this make the market extremely irrational. And what we have to understand is that over the long term, the market is going to trade based upon the fundamentals. But in the short term, over a few months and in some cases a few years, the market can get what appears to be very irrational because it's trading upon the technicals and the market sentiment and not the fundamentals. And that's what we see happening right now, is that the market sentiment is extremely bullish. I showed you guys yesterday how the CNN Fear and Greed Index was at extreme greed. And that is just an extremely bullish market sentiment, meaning people are buying. They want to keep buying. They think stocks are going to keep going up, and they just keep buying. It's also caused a little bit by the technical analysis. The technicals remain extremely bullish. I'll get into that a little bit more later in this video. And then also the fact that we had a lot of short selling last year, and short sellers made a ton of money in 2022. And as the market has continued to rise, especially here in 2023, short sellers have offloaded a lot of those positions. And when short sellers close a position, they have to buy back the stocks to close. That causes more upward pressure on stock prices. So it's just been a combination of the technicals and short sellers covering, maybe a little bit of retail FOMO, that has caused the stock market to rise so much over the first month and a half of 2023. But eventually, the stock market's going to get in line with the fundamentals. It's going to realize that earnings continue to drop and the stock market will drop. Timing that reversal from this ultra bullishness to a flip where the market starts getting back in line with the fundamentals, start going back down, well, that is extremely difficult. However, there are some indicators, some signs that we can look for where we might know that this bull run is coming to an end. We might start going back down again. We got some of those signs today. I'm going to let you know what they are in just a minute. First, let me just cover some of the news that came out today. Fed Governor Christopher Waller warned that interest rates could go higher than the market is currently pricing in. Now, this is nothing new. Jerome Powell and many other Fed members have been saying this for the last couple of weeks. The market's just been ignoring them. Today's drop in the market, probably more due to the technicals than the market actually waking up and believing the Fed. I think this is more of a technical sell-off rather than the market getting fearful that the Fed might actually do what Christopher Waller is saying. The market's been ignoring the Fed for the past 2 weeks. Why would they listen to him now? Alphabet shares also fell over 7% following Google's AI event. Google officially announced Bard, which is their ChatGPT alternative. Unfortunately, it just wasn't quite as good as the ChatGPT. Investors were not impressed and they sold off shares of Google. A firm also announced they were cutting 19% of their workforce. Shares also tanked on an earnings miss. A firm reported a loss of $1.10 for the fiscal quarter of 2023, but analysts were expecting only a loss of 98 cents. So it was a pretty big miss on earnings. They also had revenue come in at $400 million, far shy of the $416 million expected. Affirm shares were down over 19% after hours, and that was already after falling almost 7% on the day. It's a one-day loss of 26% on AFRM. Disney also announced job cuts. They're slashing 7,000 jobs as they try to reorganize and cut costs. But Disney beat expectations on streaming subscriber losses because they weren't quite as bad as feared. They also beat expectations on earnings and revenue. Earnings came in at 99 cents per share versus 78 cents per share expected. Revenue came in at $23.5 billion versus $23.3 billion expected. And total Disney Plus subscribers was higher than expected as well. Don't forget that just because a company beats earnings expectations does not mean that earnings were good. Earnings expectations could be for significant losses or significant declines in year-over-year earnings, but if the company doesn't decline as much as expected, then that is considered an earnings beat, and the stock price can go up for a day or two. So that was really the case with Disney. Earnings were still horrible. They just weren't quite as horrible as expected. A recent price hike for Disney's streaming services likely led to the loss of around 2.4 million Disney Plus subscribers. That was better than the expected loss of 3 million subscribers. Its direct-to-consumer business also once again posted an operating loss, but the loss was only $1.05 billion versus the $1.2 billion loss that Wall Street was expecting. So horrible earnings for Disney, but because it wasn't quite as horrible as expected, the stock was up about 5% after hours. And taking a look at tomorrow, we don't really have a lot of news coming out. We just have the initial jobless claims, which is going to be a weekly report. This usually doesn't move the market too much. So that's what happened on Wednesday. Now let me go over the technicals to show you some of the warning signs that we're getting that might indicate that this bull market is topping out. Now on the QQQ daily chart, this is a NASDAQ 100 ETF. We had a pretty significant drop. I mean, it was 1.7% down on the day. But if you'll notice on this chart, it's still above this red line, which is the 300-day EMA. And it's also above all of the EMAs, actually, which means the NASDAQ remains very bullish on the daily chart. So even though we got a drop today, it's still very, very bullish on the daily charts. On the SPY, which is an S&P 500 ETF, we got the exact same thing. We got a drop today of a little over 1%, but we're still above all of the EMAs. We also remain above some crucial Fibonacci retracement levels. So the S&P also remains very, very bullish on the daily chart, despite Wednesday's drop. Now, where we got the red flag was on the VIX. The VIX has fallen down into this level where it normally will rebound and start going back up. But over the past 3 weeks, we have not seen a rebound. The VIX has just kind of flattened out here. The question is, will it flatten out and continue to stay down? Will it possibly drop lower? Or will it rise above this area, which is normally considered a level where the market is topped out and will start going back down? Specifically, the number that we're looking for in the VIX is 20. The VIX is at 19.63. If the VIX rises above 20, and more specifically closes above 20, that would be an indicator that the market has topped out. And today, the VIX did rise above 20 intraday. So that's kind of your red flag that the market might be topping out, is that the VIX rose above 20 intraday. However, I want to stress that the VIX closed below 20, and given the other technicals we just looked at, the market remains very, very bullish. But we do have some red flags that we need to watch out for. So if these technicals break down, we might be looking at a top on the market. So that's what's going on in the markets. That's what's going on with the technicals. They remain very bullish, but we are getting some red flags that we might be nearing a top in the market. And if we get more confirmation, which we don't have any confirmation yet, but if we do start getting some confirmation, that might be the time where it's time to say, okay, the market's topped out. Let's go ahead and take our profits on all of our stocks and just let this market fall back down again. So that's kind of where we're at. If you guys want to know what we're buying and selling and trading, we are making some money in our We Profit Day and Night coaching program. If you guys want to join that and get back into that and learn how to make money with options, no matter what the market does, whether it goes up, down, or trades flat, you can come join the We Profit Day and Night coaching program. I wanted to let you know that we're offering a Valentine's Day special that will be running now through February 14th. We've got discounts on the entire program. If you want to know more about that, then schedule a call with our onboarding specialist who can let you know about the discounts and the pricing and then get you set up with the actual coaching program. You can sign up to schedule a call with an onboarding specialist and find out more at weprofitdayandnight.com. That's weprofitdayandnight.com. If you got a lot out of this video, then be a good friend and share this video with your friends and family so they'll know what's going on in the markets as well. And don't forget to hit the like button and subscribe. And if you missed yesterday's video, then make sure you watch it here.